We'll now delve straight into the second segment as we take a look at the latest developments in the crude oil market. The outlook for the world oil supply has been revised upwards, with more limited declines in Russian supply than previously forecast. While Russia exports of crude and oil products to Europe, US, Japan, and Korea have fallen by nearly 2.2 million barrels per day since the start of the war. The rerouting of flows to India, China, and others, along with seasonally higher Russian domestic demand, has mitigated upstream losses. The EU embargo on Russian crude and products imports that comes into full effect in February 2023 is expected to result in further declines, as some 1 million barrels per day of products and 1.3 million barrels per day of crude would have to find new homes. In a largely symbolic move, OPEC Plus agreed early this month to raise its supply target by just 100,000 barrels per day for September, significantly lower than the July and August scheduled increases of 648,000 barrels per day. The group noted that severely limited spare capacity should be used with great caution in response to severe supply disruptions, suggesting that substantial further OPEC Plus output increases are unlikely in the coming months. Well, I introduced him earlier. He's going to be joining me to look at the latest development and happenings in the global oil market. I have an energy analyst and partner, Zero Advisory and Consulting, Mr. Joseph Nwakwe. Thank you so much for your time. It's good to have you on the show.
Thank you. Hello, good afternoon.
Yes, there is politics everywhere, even in our homes, in their offices, and everywhere. I can see the politics now going on in the crude oil market. How would you explain this to us? We keep having this increase at almost all of the meetings. What is your reaction first to all of these moves and what's been happening across OPEC and OPEC Plus countries?
Well, certainly, yes, there's politics in everything. You're right. And it's not new, it's been there. Remember that the commodity we're discussing is oil, crude oil, and gas. And this is a unique product. It's rare, so whoever has it tends to want to use it to advance his interest, whether it's diplomatic or otherwise. So yes, there is politics in oil, and it's not a new thing. We've seen that. Remember the Yom Kippur War and all that. It's all politics. So, but this year we've seen a significant, if you will, uptick in politics and positioning, global positioning. So, because crude is a global product as well, tends to whatever happens in the crude market tends to reverberate across the globe. So that's in a sense why it is very important. So it confers significant power on whoever has it or whoever secures its supply. So remember that development is fueled with energy. And so far, fossils, as oil and gas, remain the dominant, approximately 70 to 80% of global energy is supplied by those. So whoever has that wants to use it, maximize the leverage that comes from having access to that. So it's not surprising that we have this level of politics playing out in the market.
We are still yet to meet with our present quota given to us by OPEC. And one way or the other, it keeps going on the high side. Are you thinking that we will meet up anytime soon with efforts being made by the authorities, and of course, the NNPCs and of course the ministry? Do you think that we'll meet up anytime soon? We need this money one way or the other.
Okay, a simple answer is no. And I will explain it this way. So, yes, there is crude theft. It's probably 300,000-400,000 barrels, something in that level. But that's not what got us where we are. I keep making the point that if you look at our investment in the sector in the last 10 years, we have seen a decline in investment, and it's not going to be closed out in a jiffy. So if it took you 10 years to basically underinvest, get us to where we are today, I'm saying that at the best of time, maybe we'll be making, if there was no theft at all, we'll be making anywhere between 1.4, 1.6 million barrels a day. And that's a far cry from a country that at some point was doing 2.5. So you're not going to close that gap in a hurry. It's going to take fairly diligent investment over time to restore that capacity. So it's a point that it's something that we all need to appreciate. We didn't get here in 1 year. It took, if you look at the investment flows into the upstream in the last 10 years, at some point we were at 22. So it took $22 billion per annum investment in the upstream. And then as I said, last year, we're at 12. So that's 10 billion, a decline over time. And it's continuous. It's still happening. So you're not going to just come back to 2 million barrels just by closing your eyes and opening it. It's not going to happen. It's going to take a lot of money. It's going to take a lot of work to get there. But I'm glad that efforts are being made to stem the stealing. The stealing will not restore. So even if you eradicate crude theft completely, we will not get back to pre-2010 levels. No, it's going to take some time to get there.
Clearly, the PIA is aimed at, of course, improving investments in the industry, and we know what's been happening with regards to NNPC becoming a limited liability company at the moment, and other issues that have been playing out, and the suspension or the push ahead or push forward of the removal of fuel subsidy, which is supposed to be part of that process. But in all of this, do you think that we are set to attract investments?
Okay, I hope so. I'd like to say that I hope we are.
I'm hopeful
if
too.
you look at the PIA, the underpinning the PIA is an assumption that we are going to attract significant levels of investment across the value chain. That's upstream, midstream, and downstream. That's the intent. And if you take it segment by segment, the upstream needs a lot of investment. We need to get back to an annual spend of about 20 billion a year from 12. So that means every year you need to throw in anywhere between 8 to 10 billion to get back to 2010 levels, right? Is it coming? What are we doing to make sure that comes? The signals from the market have been very confusing. If you have been reading the news lately, the Seplat ExxonMobil thing, that's all signals to the market that are not very clear. It's rather confusing. I think we need to clean up our acts. If we want those investments to come in, regulatory certainty is certainly something that investors are very, very clear about. They want to see certainty in the regulatory space. So all this yo-yo does not help our story. In the midstream, a lot of positive things are beginning to happen. So we hope that we can sustain it and that the regulator continues to push to attract those. The money is out there. You're just looking for a safe place to go. So we need to convince them that indeed this is a safe environment to come in. The downstream, where the subsidy issue, again, I think we need to sort out the issues around. Without moving the subsidy, investment in that sector will continue to lag. So we need to think about it. Investments that will come into refining will lag. The investments that will come into infrastructure, people are really, really worried. So we need to clean up our acts around the midstream and the downstream to be able to attract capital in that sector.
Now, I want us to talk about around gas, at least a bit about around gas, particularly at this time where we see what is happening globally, the price of gas, everywhere, a little on the high side. But Nigeria, we have this belief, or we believe to have proven and unproven reserves of gas. Are we ready to build the infrastructure that would make us take advantage of what we have? We should be making more money at this time. I'm worried. You are an expert. Take us through this.
Okay. Yes, you're right. Global gas prices have been up since COVID. So it was compounded by the Russian invasion. So right now, in some places, people are buying gas at $30 per million BTU. So it's gone haywire. We have 206 terabytes of proven gas reserves. We are doing 8 BCF a day on the average, and so we need to ramp up, production. But to do that, you need to build out the infrastructure. To do that, you need to attract the investment to build the infrastructure. The government and the national oil company simply don't have the money. If you notice, all the major investments that NNPC has been making in the last couple of years has been borrowed funds. AKK is 100 borrowed, the refinery upgrade is borrowed, everything. So the money is not there. We need to attract private capital in this space. And that's why I worry about the signals that we're sending. We need to be very clear and deliberate about attracting investment in the sector. So yes, there is a lot of scope for growth in the gas space. Even more important is domestic utilization of our produced gas. Right now, we're doing like between 1.2, 1.4 BCF a day domestically. That is a far cry. That number, we can ramp that number up in the next 4 or 5 years to 5 BCF. And that's how you get reindustrialized, if you will. So we need to be thinking of just not exporting gas. We need to be looking at, and I'm not saying exporting gas is bad. We need the revenues. But you can do both. I think we can work and chew gum at the same time. We can invest massively in export gas while investing very deliberately and massively in domestic gas production and consumption.
Now, almost finally, we talked crude oil. When we started this discussion, you also alluded to the fact that we are talking crude here and everyone is interested. You put your money where your mouth is. But I'm thinking that when we are thinking of going clean and, easing off fossil fuel and looking at gas, cleaner energy and all of this, but there is still so much concentration on crude. Does it look like we need crude to also move to the other level?
If you want a one-line answer, yes. Let me put it this way. So we started the discussion with politics.
Yes.
So there's equally politics. So in that business, there is the geopolitics of it, yes, which is nations trying to advance their interest, nations that have oil and gas, petro nations, if you will. And then there's the transition politics as well. So there's politics around energy transition as well. For us, I think we need crude to get out of the hole. My former boss used to say that crude got us here, and it's only crude that has the capacity to get us out of here. So we need to maximize and optimize our use of oil to develop other energy sources. There are very few tools in our toolbox right now that can really work the magic, and I think we need to focus on development of both the crude and the gas resources that we have. The oil we have, and people can argue. I hope, and I had held that view that there's nothing that says we cannot refine 100% crude that we produce. We can build capacity to 3 million barrels a day and refine all of it. In other words, we will be a net exporter of refined products. So there are a lot of opportunities, even in the crude space. And it will help build the economy, to help our industrialization, right? To create jobs. The spin-offs will be massive, but it takes deliberate policy implementation. So we need to roll up our sleeves and get in there. Now, the other bit about crude globally, if you notice, crude constitutes about 40–50% of the global energy supply anyway. So it's going to be a while before you can displace that much energy source. So it's every forecast I've seen says that 30 years from now, crude will still remain the dominant energy source and followed by gas. So I think we need to continue to develop those resources. We're not going to leave them in the ground. We should continue to develop them globally. The forecast is that before end of this year, we'll be looking at a demand of about 100 million, which is back to pre-COVID levels. 100 million barrels of oil every day. That's the forecast. And multiple forecasts indicate that it's going to be in that range. And right now, our global supplies are up 70 million barrels a day. So there's a huge gap that needs to be filled. And I think that nations like ours that depend on oil and gas for its sustenance needs to bend over and do what needs to be done to produce and feed the world with that energy. Transition, yes, but economies will not grind to a halt because we are going through a transition. Is usually a gradual process. I mean, you saw what happened with the Ukraine war. Countries have gone back to coal, and we're still talking transition, right? So we need to be very pragmatic about this. We need to develop our oil resources, maximize the benefit, extract as much value as possible, both oil and gas. And while we gradually clean up our energy mix, which is the transition, we'll have to have a long-term view of decarbonizing our products. So I think that's the way I will approach it.
Well, I must thank you so much. Time is fast spent. But if we can do this just in 1 minute, if we remain like this, continue, oil theft still remains, we keep losing barrels per day, and the oil market remains volatile, what would happen to Africa's most populous nation with regards to oil and its impact?
I don't want to think about it. If we remain like this,
I really want you to say something.
If we remain like this, so like this means we will produce 1.2, 1.3 million barrels of oil every day, and our current level 8 BCF of gas. That would mean that right now we are at this point we are borrowing to feed. We are practically going around borrowing money for sustenance. So that's what it will mean. And I don't know how much longer we'll be able to continue to attract people at some point are going to get tired of borrowing us money. So I hope we don't remain like this. I hope we do something different. I hope we're able to attract the investments, produce the hydrocarbons, sell them, make money for the nation. It is very key to the survival of the Nigerian nation. I hope we take the right steps.
Interesting conversation.
Remaining like this is not an option. Let me just put it that way.
All right, then I must thank you for your time, Mr. Joseph Owankwe there. He is a partner at Zara Advisory and Consulting. Thank you so much for your time on the show. Always nice talking to you. He's also a past chairman of SPE, Nigerian Council. Thank you so much. That's Society of Petroleum Engineers, clearly. Thank you so much. Do enjoy the rest of your day.
Thank you and have a beautiful day.